Ada and Canyon County median home sold prices look like they are gearing up to be on the way down again. But wait a minute, all I've heard lately is that home values are on the way back up. It has been, but remember, home values fluctuate because of supply and demand. Currently, existing homes in the greater Boise, Idaho area are showing that inventory is rapidly outpacing the demand. But why is this? Why just existing homes and not new construction? Well, perhaps new construction holds the key for current inventory situations occurring in the existing home market. If you are looking to buy, sell, or invest in our markets right here in the greater Boise, Idaho area, better known as the Treasure Valley, then this is a video you will not want to miss. According to the data, existing home inventory is on the rise here in the Treasure Valley, and rapidly, with buyers' demand seeming to make a possible turn for the worse. At the time of making this video, active for sale properties versus pendings in existing homes comes in at over 2-to-1 in Canyon County and just shy of 2-to-1 in Ada. And both counties are on the increase month over month, as you can see by these graphs. Although a rise in inventory over the last few years is not necessarily unusual for this time of year, especially over the last few years, the change in buyers' demand direction and acceleration of the inventory hitting or staying on the market is creating a significant gap between the pendings and the active listings. This statistically and historically spells price corrections coming for the markets. For example, over the last few years, and according to these charts, Q2 and Q3 during those times, the buyer's demand not only tapered off during the 2022 market correction, but also did during the 23. Both resulted in price corrections, a much stronger one in 22 than has took place in 23. As we look at the correlation between April, May of 22 and beyond, when we knew that home prices came down dramatically, inventory appears to be on the same upwards trajectory. However, this time, just under the ferocity of 2022, but also above the 2023 statistics. Nevertheless, 24 stats seem to be coming in hot. As we can see, in 22 and 23, the median home sold price came down as inventory outpaced the buyer's demand. And in 22, at a quicker and harder rate than in 23. But again, I do not have a crystal ball, so please pay attention to Mikey's monthly market updates. So hit the subscribe button, hit the notification bell so that you're constantly in tune with the videos that I do come up with. To further the point, let's go ahead and take a look at some of the data coming from Altus Research. And what are those graphs showing? To no surprise, an increasing rate in price decreases throughout the Treasure Valley. From very late March and for all upcoming, Boise is up 13% in price decreases overall, sitting at 41% of the active inventory taking a price reduction. Meridian is up 17%, sitting at 45% of the active inventory taking a price reduction. Star is up 4%, sitting at 38% of the active inventory taking a price reduction, but that stat is going down. Middleton is up 5%, sitting at 37% of the active inventory taking a price reduction, also going down. Caldwell is up 18%, sitting at 40% of the active inventory taking a price reduction, going down. Nampa is up 13%, sitting at 46%, going down. Kuna is up 16%, sitting at 41%, also going down. Emmett is up 18%, sitting at 47% of the active inventory, taking a price reduction, but also going down. And lastly, Garden City is up 4%, sitting at 40%. Exhausted yet? Whew. Now, the data shows that the price reductions are ticking on the way down, as I mentioned, but not by much, and in these areas noted. And according to the graph data previously presented, I anticipate the percentage of price reductions to rise. Another key determination of this result is the market action statistics, according to Altus Research. This is their proprietary algorithm that shows that inventory to buyers' demand is slowing. So, with all this being said and seen, why is this happening? Well, there are many reasons why this could be happening. First, and the most obvious, is mortgage interest rates. They are still high, which is chipping away at some of the buyers. So are home values comparatively to the average median income. Now, a lot of other channels have been saying this is because the Boise area is still far overvalued in comparison to the median income. Well, they're not wrong. However, the median income is just a baseline. There are people here that pay their taxes out of state so they are not recorded, or they're retired and bought their home outright in cash, or they're self-employed, or don't need to live off much, retirees especially. There are variables to throw off the median income statistic. Now, I do not have those figures of who makes what and their tax filings. Finding them proves impossible and illegal. However, again, the measurement is a guideline. If it was a hardcore fact, just about no one would be able to purchase a home right here. Mortgages since the '08 Great Recession have been highly scrutinized by debt-to-income ratios, credit scores, etc. Banks ensure people could afford the homes that they are moving into. They had to, legally. So, for the sake of this video, let's take the median income level in the Treasure Valley with a grain of salt as compared to the median home cost of a home. For this video, however, and future ones, I will concede, though, that much like the rest of America, our area is overvalued via the known statistics. So according to the available stats, there is no question about that. Also, people's mortgages are now their assets. If they are holding on to a low 2 to 4%, these sellers are sitting pretty, and for the most part are staying out of the markets. Granted, they haven't lost their jobs in droves, which they haven't yet. Any '08 major style inventory increase should stay at bay, again, for now. And according to the statistics, Idaho's unemployment has barely increased, if anything to really at all. How about people that are moving out of state because their jobs are calling them back, or the overall cost is too much for a family to bear? Well, according to United Van Line's 2023 survey, in which they indicated that they were leaving because of their job, was at a rate of 35.3%, with only 20.5% inbound to the state. However, inbounds also lead in other categories. As not to take up too much time in this video, the total inbound to the state is 52.7% for 2023, with a total outbound of 47.3%. So, inbounds to the state are still winning, at least according to the survey. Yes, I know, it's just a simple survey, but it's a decent tool for clues. How about moving because of a job in 2022 or earlier? The survey shows that moving due to a job was actually on the decline from 2019 to 2022. However, 23 is showing an increase. Clearly, though, over the years, the amount of outbounds from Idaho is increasing while the inbounds are reducing. Also, these numbers just reflect 23 only, as no statistics are currently available for 24. So overall, we have limited factual clues as to why people are leaving the state. What about other data-driven 2023 perspectives? Well, according to Zillow, a change in household or family size made up 54% of why people were deciding to sell in 2023. This also included getting married, divorced, or separated, making up 34% of that, or another life event, which made sellers give up their current asset interest rate, as in a high 2 or 4%, to move. All in all, though, the article, according to Zillow, said that 80% of the moves made on a national level were made because of a life-changing event in 2023. Remember how I said that sellers would only give up their rocking mortgages out of necessity? Regardless of what the motivator is, the indisputable fact, and according to the data, is that inventory, especially in existing homes right here in the Treasure Valley, is on the rise. Let's quickly take a look at another category. What about short sales, foreclosures, REOs, and auctions in the Treasure Valley? Is the rise in inventory due to this? According to the charts, they are not. Let's compare these graphs to the sold REOs during the Great Recession. And as we can see, we are far way off from that. However, should the Fed continue to hold the federal funds rate at the pace that they are, we could expect layoffs and bank insolvency to become a reality, and an increase in the numbers would be expected then. For more information on this, please see the video I've linked at the end. So, with lifestyle changes making up mostly a good chunk of the inventory that's on today's market, and short sales, foreclosures, and REOs not being the problem yet, at least from what the clues can show us, what else could be resulting in the existing home gap between actives and pendings for existing homes? Well, in my humble opinion, it'd be that the builders are offering concessions to buy, and enticing ones. This is probably the most influential reason for an increase in the inventory. Currently, new construction is rising in median home sold price overall, and looking at these graphs, the inventory has not gotten away from new construction in concerns to the buyer's demand, not like we saw in 2022. Remember, builders can control their inventory. But let's be honest, why buy other people's boogers? I know, sounds crass, but it's just another term utilized in the industry to say a used home. The builders are offering a brand new home. This is first and foremost, and is usually dominant in a buyer's psyche. But of course, adding to the fire are the builder's concessions. And with some builders, they could be offered substantially higher currently than what an existing home seller could potentially contribute. Buyers can buy down their mortgage interest rate with these concessions or cover closing costs. This is seen by the amount of pendings rising in new construction, Ada County specifically. Some existing homeowners are also asking way too much for their homes. In some cases, their prices are comparable to even a new build. And some are not even offering concessions. They're sticking by their guns. Remember our discussion about the data according to Altos Research? Price reductions are on the rise. So sellers of existing homes are making price reductions. As high as we saw in 2022? Not yet, but we'll just have to continue to pay attention to the supply and demand data. Inventory-wise, especially in Canyon, there are plenty of new homes to choose from or that are available. In fact, in Canyon County, it's almost an even split between the new and existing home inventory. So if a buyer can get a brand new home with the builder's concessions offered, why wouldn't they? So, given that builders aren't taking median home sold price declines yet, why are the builders offering concessions? Well, for starters, they have inventory and they want to sell it. And they will do it by maintaining a strong competitive edge by their concessions. And in cases, better neighborhood affordability. Plus, again, the fact that it's a new home also generally psychologically supersedes an existing just by being new. And it always will. But are builders doing this just because they fear the current state of the economy? Are they dumping their properties on purpose? Or are they just trying to entice a more than fair market share of the limited amount of buyers in our area? Well, I'm banking on the latter. But why? Because there are limited buyers available to our area, which has been on a gradual decline because of the mortgage interest rates, home prices, and the overall state of the U.S. economy. Better stated, inflation. Side note, if you're really thinking you're getting free concessions from the builder, you're probably not. I'm sure they just come up with adjustments to their building budget, or they are just raising the cost of the homes to include them. If I knew this for sure, well, that'd be awesome. This info is usually proprietary, but I do as much homework and inquiries into this as much as possible. So let's take a look at how builders are doing in our area, meaning Ada and Canyon County. Are the builders beginning to bow out because of national economic data and the federal funds rate? Mike, why are you looking at this? As mentioned, it's because I want to see if the builders see the economic writing on the wall and are dumping their inventory as to not take another '08 hit. Trust me, they are looking at this on the daily, as am I. For sure, they don't want to get wrapped up into another 2008, or at least they shouldn't want to. Remember, builders can also control their inventory, and a lot of the builders in the Treasure Valley ran back to pre-solds instead of offering built specs. As you can see by this data, according to LandPro, all categories including submitted lots, recorded lots, permits, and MLS sales have been on the way down since Q1 of 2022. This means that the builders are slowing down. But is it because of economic data and policies, or is it because of the buyer's traffic coming into our area? Well, according to the City of Star, are the builders slowing down subdivision applications to the City Council? And this is the fastest growing area in all of Idaho? No. According to the City of Eagle, the amount of subdivision applications are about on par as the previous years. So it appears that the builders still have faith in the economic conditions, especially local, and regardless of the national economic data and monetary policy set by the Fed. And in turn, I would lean more towards that they want more of a market share of buyers available, hence the issue to existing home sellers. This indicates that the builders have slowed down since 2022 because the buyer's traffic has. It's evident in the data, and it's just that way because that's how businesses run, competitively. There is likely a degree to justify both sides towards the original inquiry, but for now it leans towards slowing market share, and the builders want as much as they can get. Business is business. Being a master inspector, I've also gotten to know some of the builders around the area. Because of such, I know that some of the small builders, the ones that are more dependent on bank loans to fund their new projects, have jumped out or have slowed to a bare crawl. However, that doesn't mean all of them. Remember, costs are usually passed on to the consumer. And as long as they can pencil in a reasonable profit, they will take a loan. It has also been noted that a few subdivisions here in the Treasure Valley have reached foreclosure filings, the federal funds rate and the time of acquisition being the most likely source of those affected developers. So in the end, the ultimate decision of the data comes down to the Fed and inflation. How much longer will the broadsword of the federal funds rate bear down on the US economy? How much longer will inflation? According to this graph, most think that first and apparently only cut of the year will come in September. However, given that 2 meetings have passed and inflation for the most part has remained sticky, I take any promises of upcoming reductions in the federal funds rate with a serious grain of salt, and so should you. So buyers, what does this mean for you? It means that most likely expect prices to come down in existing homes, not new construction, or to have more negotiation power for price and or concessions against the sellers, as the market in existing homes moves more towards your advantage. Since real estate is valued very local, and this information is on a county level, very broad, not all sellers are the same, as are subject areas or their employees' strategies to sell, etc. A real estate agent like myself will run comps, know the current market conditions, like this video, and perform all due diligence needed to ensure you get the best price possible. We will research and determine the best strategies to help you win in your home purchase. Now again, do I have a crystal ball? No, I don't. This all could change tomorrow is a figure of speech, but it could. Remember, if sellers are not going to get the traction they want and their motivation to sell is not high, then their mortgage, especially if they're in the high 2s to 4% range, is one of their strongest assets. And if they have no good reason to sell, motivation-wise, they will probably hold off or be less willing to negotiate. That is why it is critical that a great agent should determine and fish out the answers to these questions. In the unlikely event that sellers all of a sudden hold off in droves, well, prices should return to stabilization or even price gains, although unlikely according to the data that would even happen. I wouldn't expect it at this point. However, we'll just have to keep our eye on the contract cancellations. So please stay tuned to this channel and subscribe to keep in tune with the canceled and expires data. This can be found in my Mikey's monthly market updates. How about you, sellers? What does this mean for you? It means that the negotiation power is swinging once again in the buyer's direction. Plus, you have the builders and their concessions to compete against. So pricing your home competitively in today's market is key, as you now have more competition from your neighbors. Asking for more than fair market value with little to no consideration of concessions may result in your home sitting for longer. From my experience, there are many factors that can result in home sitting for longer. However, from my experience, it's usually the price point. Sellers generally always think with sentimental value in mind and any upgrades that they have made, to name a few, to where buyers think with their pocketbooks. So properly and appropriately pricing your home in today's market will make all the difference to effectively sell your home in the quickest time possible and for the most money. Concession offerings may also entice or seal the deal. With builders offering concessions on new homes, this may likely become the reality in your upcoming sale. So if you are looking to buy, sell, or invest in today's market, or you're looking to rent, or say you just have further questions, my contact information can be found in the description below. Again, please subscribe before you go, hit the notification bell, and give me a thumbs up if you enjoyed this content. It helps out with the algorithm. Also, please see the description below for a copy of my free relocation guide, especially if you're looking to move into the area from out of state. And as for this video, that's all for now. Until the next one, I look forward to seeing you then. God bless, and I look forward to calling you my neighbor.